This is an Uncovered Japan company research report on Tomoku, ticker 3946. Tomoku is Japan's largest independent corrugated box specialist. It also sells Nordic-style homes and runs transport and warehousing, creating a three-business group with one clear profit engine: packaging. At the report's June 8th market reference date, Tomoku traded at 7.65 times forward earnings and 0.61 times book value, with a 4.53% dividend yield. The report scores value and growth strongly, but flags supply and demand as its weakest area. Tomoku does not make the raw paper. It buys containerboard from multiple mills, then corrugates, cuts, prints, and designs packaging for customers. That makes it less vertically integrated than the giants, but more focused on special shapes, short runs, print quality, and service. Its housing and logistics businesses add diversification, while corrugated packaging supplies about 82% of group operating profit. The financial picture is steady, rather than explosive. Revenue reached a record 224.1 billion yen in FY26, while operating profit rose to a record 11.4 billion yen. The report attributes that improvement to normalized box pricing and cost discipline. FY27 guidance calls for a modest revenue decline, but another step up in operating margin. The segments tell the real story. Corrugated packaging is growing and improving, with a 7.2% margin in the report's comparison year. Housing has a well-regarded Swedish house brand, but weak returns amid a difficult domestic market. Transport and warehousing has a strategic customer overlap with packaging, yet faces wage and driver hour pressure. Tomoku's balance sheet is conservative, with a 45.6% equity ratio. Operating cash flow has been dependable, although free cash flow moves with capital spending and acquisitions. In FY26, the report estimates 2.14 billion yen of dividends against 4.53 billion yen of free cash flow, supporting the income case without assuming a perfect operating environment. For income-focused investors, the clearest feature is Tomoku's written progressive dividend policy, including a 70 yen annual floor. The company has raised its dividend for 5 consecutive years. The report also highlights a large treasury stake, around 14.7%, as potential capital efficiency optionality rather than an assumed catalyst. Tomoku's advantage is not scale. The report locates its moat in specialized converting work, customer relationships, print and design capability, and the ability to source containerboard from more than one supplier. Packaging and logistics can also deepen customer relationships. The trade-off is exposure to raw material costs and the absence of upstream paper-making margins. The strategic question is growth. Tomoku's prior plan targeted 250 billion yen of revenue and a 10% return on equity, but FY26 finished below both objectives. The new plan points to overseas bolt-on acquisitions, housing improvement, and productivity investment. Those are possibilities, not base case achievements, and the next plan will need to restore credibility. At 7.65 times forward earnings, Tomoku screens as the cheapest company in the report's peer comparison, and roughly 36% below the sector average. But it is not simply a bargain multiple. The report notes that its current PE is above its own long-term average, while the discount reflects smaller scale, limited overseas exposure, low return segments, and a history of missed numeric targets. The report's illustrative 3-year scenarios range from 2,550 yen in the bear case to 9,240 yen in the bull case, with a 4,850 yen base case. These are analytical estimates under stated assumptions, not recommendations or targets. The key variables are execution on the new plan, a possible capital efficiency response, and the resilience of the dividend. The bottom line is a patient income and execution story. Tomoku combines an improving corrugated packaging business, a conservative balance sheet, and a documented progressive dividend policy. Offsetting that are weak housing and transport returns, raw material exposure, growth execution risk, and an extreme margin buying overhang. For the detailed evidence and the full risk discussion, continue with the free Uncovered Japan deep dives. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.